name is Nur Atika Nabila. So today we are diving into topic Malaysian trade performance on the past decades and recommendation of how to strengthen our economy in Malaysia.
Ringgit dijangka kembali ke paras 4.50 berbanding dolar Amerika pada penghujung tahun ini.
So the first is Malaysian trade performance on 2024 simplified overview. Total trade overview is major trader partner ASEAN as China, US, EU, Taiwan together made up 68.4% of total trade. The trade with free agreement FTA partner made up 68% of total trade. Malaysian trade rebound in 2024 after drop in 2023. All major partner and FTA markets saw improved trade. Export hit record high to the US, Taiwan, several EU and emerging markets. E&E products, petroleum, palm oils, and machinery remain top export categories. Overview is total import RM 119.34 billion up to 11.9% year-on-year. The increase signals strong domestic demand and continued industrial activity, especially electronic and machinery sector. Critical insight is growth in capital-intensive and high-tech import suggests Malaysia is not just consuming more, but gearing up for the future industrial output. A drop in crude and petroleum import indicates a transition towards cleaner or localized energy use or strategic timing of purchases. The strong US import surge could mean more than trade. So the next is the trade export major factor in quarter 4. So first is E&E sector continue to be the backbone of Malaysian export, benefiting from global digitalization and demand from the semiconductors. The second is palm oil, strong performance due to favorable global price and demand. The third one is machinery and processed food, reflects Malaysia diversifies export base and competitiveness in manufacturing. The fourth one is trade surplus. The increase in trade surplus indicate a positive balance between export and import. The second is the performance of import in quarter 4. First is E&E product. The substantial YOY increase in E&E imports underscores Malaysia's strategic emphasis on enhancing its electronic and semiconductor sector. A slight QOQ decline may indicate a temporary adjustment or inventory management rather than the downturn in demand. The second is machinery and equipment. The consistent growth in machinery imports, both YOY and QOQ alike, with Malaysians' ongoing industrialization efforts, particularly in high-tech manufacturing and infrastructure projects. The third is petroleum product. The significant YOY and QOQ declines in petroleum imports could be attributed to global energy market fluctuations, including reduced crude oil price and shift in energy consumption patterns. The fourth is chemical product. The decrease in chemical product may reflect change in domestic production capabilities or strategic shift toward the sustainable and ecologization. Lastly is trade partnership. The varied performance across different trading partners suggests a dynamic global trade environment. While import from China and Taiwan saw increase, those from the US and Japan experienced declines, possibly due to geopolitical tensions or shift in global supply chains. So, export product and market in 2024. In 2024, market Malaysia achieved a significant milestones in its trade performance, with total export reaching RM 1.51 trillion, marking a 5.7% increase from the previous year. Manufactured goods continue to be the backbone of this growth, surpassing the RM1 trillion mark for the fourth consecutive year, accounting for 55.5% of total export. So next is import performance of 2024. In 2024, Malaysia total import reached RM 1.371 trillion, a 13.2% increase from 2023, marking the highest value recorded. Major import source. China remains Malaysia's largest import source, accounting for 21.6% total imports, with a 40.8% increase year-on-year to the import source. Analytical insight, diversification of export market. The significant increase in export to the United States and Taiwan indicates Malaysia's successful diversification of its export market, reducing reliance on traditional partners like China. Next is shift in import patterns. The decline in petroleum product imports suggests a shift toward alternative energy sources of a decrease in domestic demand for petroleum-based products. The last one is trade surplus dynamics. Despite the record trade surplus, the 36.4% decrease in the overall trade surplus compared to the 2023 may indicate rising import costs or increased domestic consumption of imported goods. So, outlook for 2025. Looking ahead, Malaysian import strategy is likely to focus on: first is diversification of supply sources, reducing dependency on any single country to mitigate risk associated with geopolitical tension. The second is sustainability alternative, investing in green technologies and sustainable practice to align with global environment standards. The third is technological advancements, continue to enhance capabilities in high-tech sectors such as semiconductors, AI, and renewable energy. So, this strategic direction aims to bolster Malaysia's position in the global market, ensuring resilience and competitiveness in the face of evolving economic landscape.